Hello students, welcome to the lecture number 3 of Strategic Performance Management. So we were studying our chapter number 1, that is Introduction to Performance Management, and we have completed our first topic, that is Performance Management, and we were studying our second topic, that is Financial Performance Analysis. Okay, so our first topic was complete, that was Performance Management. We studied everything related to performance management, the objectives, elements, components, and the tools for performance management, that is efficiency and productivity. And then we learned our second topic, that is financial performance analysis. We started the second topic. I told you what is financial performance analysis and who performs it. Now we are going to continue the same topic, in which we are going to learn the tools of financial performance analysis. We are going to start tools of financial performance analysis. What are the tools which are used to analyze the performance, the financial performance of any organization? So there are total 5 tools which we have to study in this chapter. Okay, there are total 5 tools. There are various accounting tools used to carry out the financial performance analysis, out of which the important ones are. So we have to study the 5 tools. These tools are used to analyze the financial performance of any organization. See, what are those 5 tools? The first one is comparative statements. Comparative statements or comparative financial analysis. Comparative statements or comparative financial analysis. This is the first tool. Then the second one is common size statements. Common size financial analysis or common size statements. Then trend analysis. The third one is trend analysis. And the fourth one is cash flow statement and its analysis. Cash flow statements and its analysis. And the last one is ratio analysis. Ratio analysis. So we have 5 tools for financial performance analysis. To analyze the financial position of any organization, we have 5 tools. By using these 5 tools, we can analyze the financial position of any organization. So one by one, I will tell you the meaning of all these 5 tools. But for now, I am just telling you the name of all the tools. The first one is comparative financial analysis or comparative statements. Second one is common size statements. Third is trend analysis. Fourth is cash flow statements and analysis. And the fifth one is ratio analysis. Okay. So if you are a commerce students, I hope you are familiar with all these terms. Somewhere you have studied all these things, but still we are going to learn it in detail. So don't worry about it. I'm going to tell you in detail the explanation of all these tools. Okay, and also we are going to solve the questions from each and every topic. See, this is a practical topic. Theory is not asked from this topic. Mostly practical of chapter 1 comes from these topics. From this topic, this particular topic, tools of financial performance analysis. So it's a very important topic. 7 marks question may come in your exam, and it is also very scoring and very easy. It's a these concepts are very basic concepts. Okay. So first we will start comparative financial analysis. Comparative financial analysis. The first tool is comparative financial analysis. See what is given. What is comparative financial analysis? These statements provide comparative analysis of the financial position of an enterprise over 2 or more periods. It is also known as horizontal analysis. See what is given here. What is the meaning of comparative financial analysis? Through comparative financial analysis, we can compare the financial position of 2 years of the same organization, 2 or more years also. So we can compare the financial performance of 2 or more years. Financial performance of whom? The same organization. Of one organization, we can compare the 2 years. any 2 years we can compare the financial position of current year and previous year. Okay, so we are going to compare the financial position of current year from the financial position of previous year, so that we can see that how much it is growing. Is it growing or not? The sales, income, expenses, whatever it is it growing or not growing, or it is declining, or is it declining? So we are going to compare the financial performance of any 2 or more years through comparative financial analysis. The name itself is comparative. So we are going to compare to find out the growth. Is it growing or not? Is the organization growing or not? Okay. So how it is done? The question is how it is done. See, for example, I am going to give you an example. The first one is comparative financial analysis. The first one is comparative financial analysis. Okay. So, example. Suppose the turnover for the year 2023-24 was 10 lakh rupees. The turnover was 10 lakh rupees in 2023-24. In the financial year 2023-24, it was 10 lakh. And the turnover for 2024-25 is 12 lakh rupees. It is 12 lakh rupees in current year. Okay. So we can clearly see that the turnover has increased from previous year to current year. It is increased. Okay, there is an increase in turnover. Increased by how much? 2 lakh rupees. So in comparative financial analysis, we find out in percentage the amount of increase or decrease. We find out the percentage. Clearly we can see that it has increased. The turnover is increased from previous year to now. So we have to find out the percentage increase or decrease. We are going to compare the turnover of previous year and the current year. We are comparing it. Is it increased or decreased? So clearly it is increased. By how much? We have to find out the percentage. So what is the formula to find out the percentage increase or decrease? What is the formula? So the formula is change in amount. Change in amount, that is current year amount minus previous year amount. Current year amount minus previous year amount divided by previous year amount. So we are taking previous year amount as base. Why? Because we are comparing it with the previous year. How much it is increased or decreased in comparison with previous year. So we have to take that as base. The previous year amount will be taken as base. This is the basic formula for change of percentage of anything. This is a basic formula. We are studying it from childhood only. It is a basic formula how to find out the percentage change of anything. So current year amount minus previous year amount divided by previous year amount, and the most important thing is into 100 to find out the percentage, to convert it into the percentage. So current year amount is 12 lakh, previous year amount is 10 lakh, divided by the base, that is previous year amount 10 lakh rupees, into 100. So it will be 2 lakh rupees divided by 10 lakh into 100. So what will be the answer? Please tell me the answer. Calculate it and tell me the answer. It will be 20%, right? It will be 20%. And see, the answer is positive. That means it is increasing. Obviously, it is increasing. It has increased from 10 lakh rupees to 12 lakhs. Is it visible? It is visible. So the answer will be positive because the current year amount is greater. Whenever the current year amount is greater, the answer will be positive. Obviously, it will be positive. So if the answer is positive, that means it is increasing. So for every element of balance sheet and income statement, we have to do the same thing. We have to find out the percentage increase or decrease to compare the financial position of 2 years or more years. So turnover is in better position now because it is increasing. Okay, it is increasing. So this was a basic example. This was a basic example. Now we are going to solve a question. Now we are going to solve a full question. I hope you have copied this. I hope you have copied this. So now I am moving to the illustration number 1. Illustration number 1. One balance sheet is given. Balance sheet is given. In illustration number 1, one balance sheet is given and we have to prepare a comparative balance sheet. So data of 2 years is given. Data of 2 years given here. Data of 2023, year ending 2023 and year ending 2024. Okay. So let's start this. What we are solving? Illustration number 1. Illustration 1 we are solving. Please make a table. Please make a proper table in which you have to make 5 columns. Please make a table of 5 columns. The first one will be particulars. You have to make a proper table with lines and all. If you will do the proper formatting of any solution, any tabular solution, then only they are going to give you the marks. Otherwise, they may cut your marks also. I am not making it, but you have to make a proper table. The first column will be particulars. The second one will be 2023. In third column, 2024. In fourth column, write amount of increase, decrease. Amount of increase, decrease. By how much amount the figures are changing. And the last one will be percentage of increase, decrease. The percentage of increase, decrease. The most important thing we have to find out. So there will be 5 columns. In first you have to write particulars. Then in second column you have to put the data of 2023. In third column you have to put the data of 2024. The fourth column is amount of change, increase or decrease, and the last column will be percentage of increase, decrease. Okay, so let's start this. I hope you have made the table. See, what is the first thing? Current assets. Current assets. The first thing is current assets. in which the first is cash and bank balance. Cash and bank balance. So we have to take these two amounts. We have to take these two amounts, 23,600 and 2,000. We have to take these two amounts. So in 2023, put 23,600, and in 2024 it became 2,000. It became 2,000. In 2023, the cash and bank balance was 23,600, and in 2024 it is 2,000. So how much change is there? Is it decreasing or increasing? In current year, it is less. Right? In current year, the cash and bank balance is less. Lesser by how much amount? 21,600. Please deduct 23,600 from 2,000. Deduct the previous year amount from current year amount, that is 2,000 minus 23,600. So it will be 21,600 in negative. Right? There is decrease by 21,600. The amount is decreased by 21,600. And now we have to find out the percentage change. We have to find out what percentage change. So I told you the formula, how to calculate percentage change. You have to apply this formula. Current year amount minus previous year amount. So already we have calculated current year amount minus previous year amount. That means 2,000 minus 23,600. We have already calculated, that is 21,600 divided by previous year amount, that was 23,600 into 100. 21,600 divided by 23,600 into 100. What will be the answer? Please calculate it and tell me the answer. Please quickly calculate it and tell me the answer. 21,600 divided by 23,600 into 100. It will be 91.477% something. That means 91.5% approx. Rounded figure is 91.5%. So I hope it is clear how the percentage is calculated. We have to take the current year amount, then we have to deduct the previous year amount from it. So basically it is a difference of current year amount and previous year amount divided by the base, that is previous year amount, into 100. So it will be 91.5%, and it will be negative because 2,000 is a lesser amount. The current year amount is lesser one, and we have to deduct the bigger amount from it, that is 23,600. So answer will be negative. Obviously it will be negative because the cash and bank balance is decreasing. So it will be minus 91.5%. Likewise, we have to calculate the percentage change in each and every item. We have to find out the percentage change in each and every item now. Then the next one is debtors. Next one is debtors. So the amount of debtors is 41,800 in previous year and 38,000 in current year. $41,800 and 38,000. So is it increasing or decreasing? Obviously it is decreasing. It is decreasing. By how much? By 3,800 rupees. Here please specify in rupees. Amount in rupees. The checker may cut your number if you are not doing this. Please specifically you have to write. Please write it in rupees. Amount in rupees. So debtor is decreasing by 3,800 rupees. 38,000 minus 41,800. It will be minus 3,800. And what will be the percentage change? It will be minus 3,800 divided by 41,800 into 100. Sorry. It is okay. It is minus 3,800 and calculation will be minus 3,800 divided by 41,800 into 100. The answer will be, what will be the answer? Please tell me. The answer will be negative. It will be 9.1%. 9.1%. It will be 9.1% in negative. So debtors is decreased by 9.1% in current year. It is decreased by 9.1%. I hope it is clear. Then inventory. Inventory is 32,000 and 26,000. Again, inventory is also decreasing. By how much? By 6,000. Calculate the percentage. 6,000 divided by 32,000 into 100. 6,000 divided by 32,000 into 100. It will be 18.8%. That too in minus, in negative. 18.8%. I am not writing the calculations anymore. Please calculate by your own. Very simple calculations are there. Please calculate on your own. I am not going to write the calculations now. Next is other current assets. Other current assets. What is the amount? 6,400 and 2,600. Again it is decreasing. By how much? It is decreasing by 3,800 rupees. 3,800 rupees. What will be the percentage change? 3,800 rupees in minus divided by 6,400 into 100. It will be minus 59.4%. Minus 59.4%. Then total is given. Total of current assets is given. We have to find out the percentage change of total also. So the total is 1,03,800 and the total of current year is 68,600. Again, it is decreasing. Decreased by how much? 35,200 rupees. 35,200 rupees, and the percentage will be 35,200 rupees divided by 1,03,800 rupees. It will be rounded off 33.9%. 33.9% in minus. It will be negative because the total current assets are decreasing. From previous year to current year, it is decreasing. So the total decreased percentage is 33.9%. There is 33.9% change in current assets of current year and previous year. There is change of 33.9%. The current assets have decreased by 33.9% from previous year to current year. So the total change is 33.9%. Now we have to calculate the fixed assets. First one is land and building. In previous year it is 54,000 and in current year it is 34,000. Land and building, 54,000 and 34,000. So there is decrease of 20,000 rupees. And what will be the percentage change? It will be 20,000 minus 20,000 divided by 54,000 into 100. It will be minus 37%. It will be minus 37%. I am doing it fast because it is a very simple topic and there are very simple calculations. So there is decrease of 37% in land and building. Then the next is plant and machinery. Plant and machinery. What is the amount? 62,000 and 1,57,200. 62,000, 1,57,200. So it is increasing. It is increasing in current year. Increased by how much? Increased by 95,200. 95,200. The amount is increased by 95,200 rupees. And we have to find out the percentage change. So subtract 62,000 from 1,57,200 rupees. It will be 95,200. This is the difference, the changing amount, the amount which is changing. Change in amount is 95,200 divided by 62,000. Divided by 62,000. So the answer will be positive because change is positive. It is increasing. So the answer will be positive. The answer will be 153.5%. It will be 153.5%. The plant and machinery is increased by 153.5%. That is more than 100%. Okay. Then the next one is furniture. Furniture. Furniture is 5800 in previous year and 9600 in current year. So it is also increasing. Furniture is also increasing. By how much? By 3800 rupees. So it is positive. Again it is positive. So what will be the percentage change? 3800 divided by 5800. 3800 divided by 5800. So it will be rounded off 65.5%. It will be rounded off 65.5%. Okay. Now the total, we have to find out the change in total fixed assets. That is 1,21,800 rupees and 2,08,000 rupees. The total of fixed assets is 1,21,800 and 2,08,000 rupees. So it is increasing. In total also we can see that it is increasing. Increased by how much amount? By 79,000 rupees. By 79,000 rupees. So what will be the percentage change? 79,000 divided by 1,21,800. It will be 64.9%. Rounded off, it will be 64.9%. So there is increase in fixed assets by 64.9%. The fixed assets are increased by 64.9% than previous year. I hope it is clear. I hope it is clear. Then the next thing is long-term investments. Long-term investments. In previous year, it was 9,200. In current year, it is 11,800. So, it is increasing. Obviously, it is increasing. By how much? By 2,600 rupees. So, the answer will be positive. Sorry, here I have added the bracket. It will not be there because the answer was positive. Wherever the answer is positive, please don't add the brackets. So long-term investments are also increasing. By how much? By 2,600 rupees. So what will be the percentage change? 2,600 divided by 9,200 into 100. So it will be rounded off 28.3%. I am not adding the bracket because it is positive. It is increasing. So don't add the brackets. Now total assets. What is the total? 2,34,800 and 2,81,200. So we have to find out the percentage change of total also. Total assets. 2,34,800 and 2,81,200. So if we see the total also, the total assets have increased. The total assets have increased by how much amount? 46,400 rupees. 46,400 rupees. It has increased, and the percentage increase will be 46,400 divided by 2,34,800. It will be rounded off 19.8%. It will be 19.8%. So there is increase in total assets by 19.8% compared to previous year. The previous year amount has increased by 19.8% of what? Of assets, total assets. So I hope it is clear. I hope it is clear to you all. Then let's come to the liabilities. First one is current liabilities. The current liabilities in previous year it is 52,400 and in current year it is 25,400. So we are done with total assets. Now liabilities. The first one is current liabilities. No bifurcation is given, only the amount is given. So 52,400 in previous year and 25,400 in current year. So it is decreasing. Obviously it is decreasing. So the change in amount will be negative. How much it has changed? By 27,000 rupees. By 27,000 rupees. If any answer is negative, don't forget to add a bracket. Either you can insert a minus sign or add a bracket. And if the answer is positive, please don't make the mistake of adding a bracket like I did. Please don't do it. So how much will be the percentage change? 27,000 divided by 52,400. It will be round off 51.5%. 51.5%. That too in negative. Minus 51.5%. Then the next thing is long-term debt. Long-term debt. What is the amount of long-term debt? 40,000 and 65,000. 40,000 and 65,000. So again, it is increasing. Increased by how much? By 25,000 rupees. Increased by 25,000 rupees. So what will be the percentage change? Percentage increase will be 25,000 divided by 40,000 into 100. So it will be rounded off 62.5%. It will be 62.5%. So there is increase by 62.5%. Then next is owner's equity. Next is owner's equity. In owner's equity, we have bifurcation of equity share capital and reserves and surplus. So first, equity share capital. It is 80,000 in previous year and 1,20,000 in current year. Equity share capital. I am using the short form ESC, equity share capital. But please, you don't use any short form in the exams. Please don't use any short forms in the exams. They may cut your marks. So there is an increase of 40,000 rupees. Clearly it is increasing by 40,000 rupees. So the percentage change will be 40,000 divided by 80,000. It will be 50%. Exact 50% increase is there in equity share capital. Next is reserves and surplus. 62,400 in previous year and 70,800 in current year. reserves and surplus. 62,400 in previous year, 70,800 in current year. So how much increase is there? How much it has increased? By 8,400 rupees. And what will be the percentage change? 84,000 divided by 62,400 into 100. It will be 13.5%. It will be 13.5%. Then total of owner's equity 1,42,400 and 1,90,800. So in total it has increased. The owner's equity is increased by how much? By 48,400 rupees. 48,400 rupees. And the percentage change will be 48,400 divided by 1,42,400 into 100. So it will be 34%. Exact 34% it will be. Now total liabilities and capital. Total. It is 2,34,800 and 2,81,200. Same as total assets. Assets and liabilities side is always same. So 2,34,800 divided by 2,81,200. So how much change is there? It is increased by 46,400 rupees. That is 19.8%. It is 19.8% rounded off. So it is done. I hope it is clear what we have done. Please make the table properly. I have not inserted the lines, but you have to do it in your exams. And don't use any shortcuts. Don't use any shortcuts in the exam. I hope you have copied this. I am giving you 2 minutes. Please copy this. Then I will tell you the summary of this. What we have analyzed. What we got through this. What we got by doing this. Please note down this as soon as possible. I will also give you the solution in PDF form of this particular answer. I will also give you the PDF, but now please copy it. Please copy it. Please copy this as soon as possible. I am giving you 1 minute. Okay, so let's come to the conclusion. What is the conclusion of this? What we have concluded. What is the conclusion? See, in the balance sheet itself, you can see that the current assets, the total of current assets, there is a decrease in current assets. We have also calculated how much it has decreased. It has decreased by 33.9%. It has decreased by 33.9%. What? Current assets. The current assets are decreased by 33.9%. Right? It has decreased by 33.9%. So decreased by 33.9%, right? Now let's come to the current liabilities. See, there is also decrease in current liabilities. Decreased by how much amount? We have calculated here. By 27,000 rupees, that is 51.5%. So it is decreased by 51.5%, that is 27,000 rupees minus 27,000 rupees. And current assets are decreased by minus 35,200 rupees, right? So we can see that the current assets are also decreasing and current liabilities are also decreasing. Current assets are also decreasing and current liabilities are also decreasing. So you have to write the conclusion one by one, what you have observed. You have to write the conclusion, what you have observed. I hope you have copied this. If not, please do it as fast as possible. As soon as possible, please copy this. Please do it fast. Please do it fast. Okay. So we are going to write the conclusion. The conclusion. Please give the heading conclusion. Write the current assets have decreased by 33.9%. The current assets have decreased by 33.9%, and the current liabilities have decreased, have also decreased, have also decreased by 51.5%. The current assets have decreased by 33.9% and the current liabilities have also decreased by 51.5%. So what does it means? What does it means? There is decrease in current assets also and current liabilities also. But can you say that if our current assets are decreased but the current liabilities are decreased more? Current assets are decreased by 33.9% but the current liabilities are decreased by 51.5%. The decrease in current liabilities is more. So this is a good situation because the current liabilities, the liabilities are decreased more. They have fallen more. So can you say that the current assets are used for decreasing the current liabilities, for paying the current liabilities? Can you say that? Yes, we can say that. The current assets may have used for decreasing the paying the current liabilities. So this is a good thing, right? So it will not affect the liquidity of the firm. It will not affect the liquidity of the firm. So right, but it will not affect the liquidity in short term, because decrease in liability is more than decrease in current assets. Decrease in current liabilities is more than decrease in current assets. What is the meaning of liquidity? Liquidity means the ability of the firm to pay its short-term debts, So it will not affect the liquidity because the current assets have decreased lesser than the current liabilities. We have paid more liabilities. So liabilities are less now in comparison with assets. So it will not affect the liquidity of the firm, the liquidity position of this organization. Okay. So like this, you have to write the conclusion, what you have analyzed. So this was the first point. Then the second point. Now can you see that the cash and bank balance, first of all, how can you analyze the financial position of any entity? You can see the cash and bank balance, you can see the current assets, current liabilities, then long-term debts, owner's equity. You can analyze these particular things, right? So first we saw the current assets and current liabilities, the liquidity position, the liquidity of the organization. Then we are going to see the cash and bank balance. In previous year, the cash and bank balance was 23,600. Now it is only 2,000. So it has substantially decreased. It has adversely decreased. It has decreased by 91.5%, I guess. 91.5%. It has decreased by 21,600, that is 91.5%. So this is a substantial change, right? This is a substantial change. There is a substantial change. So the second point will be cash is decreased by 91.5%. The cash and bank balance is decreased by 91.5%. That means the cash position of the company is very poor. Now the cash position in current year is very poor because it has decreased by 91.5%. This is an adverse position for the company. Also, the company may face problems in meeting its short-term obligations. Okay, so cash is decreased by 91.5%, which is an adverse position of the company. It is a very poor position in terms of cash and bank balance. Also, the company may face problems in meeting its short term obligations. In short term, if it has to pay any of the expenses out of cash and bank, it will face problems because it is not having cash and bank balance. It has very less cash and bank balance. It has current assets, but it is not, the company is not having appropriate cash and bank balance. So it may face problems in short term. Current assets are used in short term only, na? So it will face problems. Cash and bank is also a current asset. So the company is going to face problems in short term. For long term, it has owner's equity, loan and everything. But in short term, it may face problems. Now, next point. Next, you can see that there is increase in fixed assets. There is increase in fixed assets. How much amount is increased? It is increased by 79,000. 79,000. So it is going up by 64.9%. 64.9%. The fixed assets are increased by 79,000, that is 64.9%. 64.9%, right? So you can see that in fixed assets we have land and building. Land and building is decreasing. It is decreasing. The plant and machinery is increasing by 153% something. So the plant and machinery is increasing by something 153%. We have calculated here. See, 153.5%. So it is increasing, and the furniture is also increasing. Furniture is also increasing by 65.5%. 65.5% increasing. So can you say that there is a substantial increase in plant and machinery? There is a substantial increase in plant and machinery, right? There is a substantial increase in plant and machinery. The amount is increased by 153%. Almost double, more than double. It has increased above 100%. That is 153%. More than double. Now this was one point. I will write that before. See one more thing. The next thing is long-term debt and owner's equity. Long-term debt and owner's equity. Can you see that long-term debt has increased? That means the company has borrowed money. Company has borrowed money from outside, right? The long-term debt is increased. So the percentage increase is 62.5%. So the debt is increased by 62.5%, right? It has increased by 62.5%. Also, the owner's equity is also increased. It is also increased by how much? By 34%. By 48,400 rupees. That is 34%. 34%. So owner's equity is also increasing and long-term debt is also increasing, which is not good for the company because it is borrowing money from outside. It is dependent on the money of outsiders. So it is taking money from outside. The company is borrowing money, right? First, write about long-term debt and owner's equity. long-term debt and owner's fund increased substantially, it means the financial risk has increased. It means the financial risk has increased. Why? Because the company is borrowing money from outside. It is taking loan from outside, that is long-term debt, and it is also issuing its securities. The equity capital, the owner's fund is also increasing, so it is dependent on the money of outsiders, right? And we also saw that there is increase in fixed assets. There is a substantial increase in plant and machinery. Actually, this is a good thing. This is a good thing because the production capacity will also increase. The production capacity will also increase. If plant and machinery has increased, that means the production capacity is increasing. There are growth prospects for the company. So the next point will be fixed assets have also increased. Fixed assets have also increased. This is mainly due to increase in plant and machinery. There is a substantial increase in what? In plant and machinery. Furniture is also increased, but there is substantial change in plant and machinery. This indicates increase in production capacity. So we can assume that such assets are financed by long-term debt and owner's equity. Long-term debt and owner's equity. See, there is increase in long-term debt also and owner's equity also. So can we assume that they have taken the loan, they have borrowed the money because they have to buy the fixed assets, that is plant and machinery and furniture? Can we say that? We can assume that, right? So we can assume that the other company has borrowed the money from outsiders to increase its production capacity, which is a good thing. In long term, it is a good thing. So it will not affect in short term. It is a long term thing. Growth prospects are there for the company. So it is a positive thing. It is a positive thing. When we see that there is increase in long term debt and owner's equity, we thought that there is financial risk. Obviously there is, but if they have increased the production capacity by buying the plant and machinery, so there will be less risk because there will be growth opportunities. Growth opportunities will be there, right? This means long-term stability of the business. Long-term stability of business. It indicates long-term planning. It indicates long-term planning. So this is the conclusion. What we have analyzed. This is the conclusion. Please note down this. It is very easy to analyze. First you see the cash and bank balance. Then Come to current assets, current liabilities. Then see if there is any change in fixed assets or not. If there is any change in owner's equity, long-term debts or not. So we have to see everything. We have to analyze everything. And at last we have to write the conclusion. The calculations are also very easy. So if this question comes in exam, you have to score the full 7 marks. Please try to score 7 marks, the total full 7 marks. Because these topics are very easy topics, very basic topics. I will also give you the answer in PDF form. But please write this, please copy this. I hope it is clear to you all. Please note down. And if you have any doubt, please ask it today itself. You can ask it afterwards also, but don't collect your doubts, clear them. Okay. So in the next lecture, we will continue with the common size statements. Today, we covered only one topic, that is comparative financial analysis. And in the next lecture, we will start the next one, that is common size statements. Okay.